Hey guys, after 2 months, here I am back at it again for new videos. I'm sorry I took a little break, but here I am back for you guys with a new video about the 5 stocks that you should absolutely own in August of 2021. As always guys, I'm going to present you a few companies here. Some are risky, some are safe, some pay dividends, some don't. So please, if you don't want to miss anything, go and watch this video until the very end so that you are sure that you don't miss any important companies. I miss you guys a lot, but here I am back at it again for a new video. And let's start with the first stock on this list. That is gonna be Visa. Visa is a payment technology company that is pretty much connecting consumers to merchants, to buyers and sellers all around the world and all virtually. And if you don't know Visa, you might know their biggest adversary, MasterCard. The company works with the global environment of money and money transfers online, and they're pretty much the leader when it comes to this. So let's go into the statistics of Visa. They are currently worth about $244 per share, with a 52-week low of $179 to $250. So as you can see, we are not quite on the high end of the spectrum, but we are still pretty high when it comes to the 52-week range. So if you want to buy Visa, maybe right now is not exactly the best time. But if you believe in this company really long term, I believe there is nothing wrong when it comes to buying it right now. They have a massive market cap of $547 billion, so that makes it a really safe investment in my opinion, because so many people in the world are using them and they have pretty much an established business at the moment. And in the tech sector, you know that these companies can grow really big, so they're already worth about $547 billion right now. They have a PE ratio of 51.8 and an EPS at the moment of 484. Now what's cool about Visa is that it's one of the rare tech sector stocks that actually pay a decent dividend, even though it's nothing big if you compare it to the bigger dividend paying stocks, but they still pay a 0.51% dividend, which, you know, it's a beginning, right? And since this company is so profitable and working so well, I believe that in the future they're gonna grow the dividend quite a bit. So if you invest into them right now for the dividend, it might grow a lot in the future. And they have a current ratio of about 2.12 at the moment, which means that they have 2.12 times more assets than liabilities, which is great for this company. It's pretty healthy actually. And now if we look at what the experts have to say on Visa, it's pretty great. They're actually all telling you to buy this company. And if we look also at the price target, we can see that it's way higher than where it's right now. So if you want to get into Visa right now, might be a good choice actually. But hey guys, if you love what you see on this channel right here, you can join my Discord server that is in the description down below, where you can have fun with me and the community, share stuff, share your research and share what you are doing on the stock market, and also have fun. You can game with me if you want to. So if you want to, you can join it right now. And if you really want to, you can support myself and this channel by buying me a coffee on Buy Me a Coffee. It's a website where you can buy a coffee for a creator you like. So if you really like what I do here and the content on this channel, you can click down below on Buy Me a Coffee and give me a little tip. Thank you in advance. But wait, we are not done, because the second stock on this list is NIO. And if you've never heard of NIO, well, they had a huge hype in the last year because they pretty much exploded in the stock market. They are a pioneer when it comes to electric vehicles in China, and they're a big competitor when it comes to all the electric vehicles in the world. They design, manufacture and sell electric vehicles in the entirety of China. But at the same time, they're also working on AI and autopilot stuff, just like Tesla, which makes them an even more interesting company to invest in. Now, they are currently worth about $43.9 per share, which is pretty high if you consider that in the 52-week range, they went from $11 to $66.9. So they had a huge 52-week range because, as I said before, they pretty much exploded in 1 year. But overall, we are still not quite at the higher side of the 52-week range. So if you want to buy right now into NIO, most people would say that it's pretty safe to do it at the moment. They have a market cap of about $72 billion, which is pretty big for such a company that is so young, but that's also pretty promising for them since they are so new. They currently don't have any PE ratios since they're not profitable yet, because as I said, it's a pretty new company, and they have a -1 EPS. Now, of course, it makes it a pretty risky investment because on one side, you have a company that is growing super fast, but they're not profitable yet. So at any point in time, you can have trouble with that. And of course, since they're not profitable yet, they actually don't pay in dividends, which makes sense, right? You don't want a company that is not profitable to pay dividend and go even deeper into the dirt. But what's also cool about this company is that they have a current ratio of 3, which means they have 3 times more assets than liabilities, which is pretty great for them. Now, if you look at what the experts have to say about NIO, it's pretty cool because most of them are telling you to buy. And the price target of this company is more than $55, so way higher than where it's at right now. So if you believe into the long-term success of NIO, it might be a great time to buy it. But always remember, guys, that this is a risky company. They're not even profitable yet, so always stay comfortable in your risk zone. If you don't feel it, don't buy it. Speaking about risk, right now is the safe choice. Yeah, because if you don't know, in every single one of these videos, I will give you one safe stock that I believe is really great. So something that is really safe and really profitable at the same time. In today's episode, it's actually not a stock, but an ETF, which in my opinion is the safest way to invest your money. An ETF is an exchange traded fund, which means that you are pretty much buying multiple companies in just one holding. That makes it even better because you are already diversifying when you buy one thing. And today's safe choice is VGT ETF, Vanguard Information and Technology. They are currently worth about $414 per share with a 52-week range of 282 to 415. So right now, be careful guys, because we are on the highest end of the 52-week range, which means that most likely in the future we'll see a little correction, especially because this ETF only regroups tech sector stocks. So I would not recommend buying it at the moment, but keep an eye on this ETF if you want to buy into the tech sector, because this stock regroups some of the biggest tech sector stocks you can find, like Nvidia, Visa that we just talked about, MasterCard, Apple, Amazon, and all these big blue chips companies. Now, this ETF has an expense ratio of 0.1, which means that every single year that you hold this ETF, you're gonna have to pay 0.1% of your initial investments for the management of this ETF, because of course, since it's multiple stocks bundled into one, you have people behind that are managing this ETF with buying new stocks, selling new stocks, and changing the percentages for it to be the most performing they can. And 0.1 as an expense ratio is actually pretty low. You have some other ETF that have way higher expense ratios, like the ARK ETF, for example. But something even cooler with this ETF is that they also pay a dividend of 0.66. So if you guys like safe investments, dividend, and all that fun stuff, I believe it's a great ETF to invest in. So all the companies that you're gonna find in this ETF, as I said before, are all big blue chips tech sector companies, some that probably won't fail in the near future and that will perform great in the long term. So if you want to invest into the tech sector, minimize the risks, and have a dividend for yourself, I believe this ETF is a great one to own. Now, if you guys enjoy what you're seeing right here and all this information, please like the video so that other people will also see it and they can discover all these amazing stocks and ETFs that I'm giving you today. Now, next on the list is Amazon, and I don't really know if I have to describe Amazon's business for you guys because you most likely know what they do. They deliver packages all around the globe. It's an online marketplace, and they also have other services like Amazon Prime, that is pretty much a Netflix for Amazon, and a lot of other ways that they make money. It's an absolute monster of a company that is growing so fast and so big that people are getting scared of it sometimes. They are currently worth about $3,654 a share, but don't be scared of this big number because on most brokers right now you can actually buy fractional shares, so you can buy percentages of one share of Amazon. So if $3,654 is too much for you, which I completely understand, you can buy just 1% of a share and buy it for $35. So don't be scared of the big numbers, buy fractional shares if you can. They have a 52-week range of 2,800 to 3,777. So as you can see, they moved quite a bit since last year because of the pandemic that pushed them as one of the most used company in the world. So that's why the prices went up this much. Now, we kind of are on the higher end of the spectrum, but still, we still have some ways to grow for this 52-week range, so we're pretty good at the moment. They have a market cap of $1.84 trillion, which means that this company definitely is in the big boy league. So if you want to buy Amazon, that's a big company that you are buying right now. They have a PE ratio of 69. Nice. And an EPS of 52. They currently don't pay any dividend even though they're really profitable, and they have an expense ratio of assets per liability of 1.05, which is really small if you ask me, but for a company that is worth trillions of dollars, that's understandable because they are pretty much buying so much things that they can have as much assets as liabilities. But now if we look at what the experts have to say on the Amazon stock, they're pretty much all recommending to buy or even buy strong on this company. So yeah, that's what they have to say, not me. And the analysts also have a price target of more than $4,000. So just imagine how big this company will become in the future. It's a buy for the experts, it's a buy for me, it's a buy for everybody. And now last but definitely not least, I want to talk about the stocks that I love, and that's Nvidia. Now, if you've never heard of Nvidia, what they do is that they design GPUs that are pretty much the graphics card of a computer. If you don't know, for gamers they use it all the time, and professionals also most of the time have to use GPUs for their work. But that's not it, they also have some softwares that they're selling and some great technologies that they're creating for the gaming industry in general. Now, last year when they started rolling out the new GPUs that they created, they literally broke the entire GPU market because their prices were so low for quality that was so great. Everybody was buying Nvidia, and I really believe that if they continue on this path for the future, Nvidia would just become a beast of a company when it comes to these GPU sales and everything that comes with it. Their company is growing super rapidly, and I actually believe it's one of the greatest investments for the tech sector right now. Now, they are worth about $195 per share, which is pretty high if you compare it to the 52-week range. That went from $102 to $208. So we kind of are on the higher side of the spectrum when it comes to the 52-week range. So I would not really recommend buying Nvidia right now. Maybe wait for a little dip, or if you feel comfortable investing right now into the company, if you really believe in the long-term success of it, it might be a great time to buy them. They have a huge market cap for such a new company of $487 billion, which is amazing since this company started blowing up pretty much in the latest years. They're already so big, but they at the same time have so much ways to grow their business in the future. I really believe in Nvidia's success. Now, they have a P/E ratio of 92 and an earning per share of 2.12. And something cool with them is that they started paying a dividend. It's actually a pretty small one at the moment, 0.08%. So yeah, small dividend, but it's pretty new, so they're planning on growing it in the future in the long run. So if you guys like to invest into dividends, and especially into growing dividends, Nvidia might be an interesting pick for you guys, because 0.08% at the moment will not give you any money pretty much, but over the long term that might be a great thing to do. Now, they have a current ratio of 4.53 assets per liability, which is pretty amazing if you ask me. And if you look for what the experts have to say about this stock, they pretty much all recommend a strong buy or a buy on it. So that's pretty much the same thing for me. I love this company. I believe it's a great holding for anyone that is interested into the tech sector, and especially into the GPU market. Like with these companies like Intel, AMD, or Nvidia, that's one of the greatest choice in my opinion. Now, I really hope you guys enjoyed this video. I'm sorry for not being here for 2 months, but now I'm here for new videos. So please check the description down below for buy me a coffee and Discord. Like this video, and I'm gonna see you guys in the next one.